We are covering these 6 top actively traded stocks that are bullish today. While watching price actions, let us inform you. Our review on SoFi Technologies Incorporated has become a key player in the financial services world, offering a wide range of products designed to help people manage their money more effectively. Whether it's student loans, personal loans, or investment tools, SoFi has created a tech-forward platform that allows consumers to borrow, save, spend, and protect their money in one place. Beyond traditional financial products, they've expanded into offering services like a credit card and even wealth management, making them a comprehensive player in the space. Recently, there's been some big news that could shake things up for SoFi, especially in its student loan refinancing business. President Trump just signed an executive order to dismantle the U.S. Department of Education, with plans to transfer federal student loan servicing to the Small Business Administration, SBA. While the specifics of how this transition will happen are still unclear, this development has the potential to significantly impact companies like SoFi, which has become a major player in the student loan refinancing market. If the SBA steps in to handle student loans, it could disrupt SoFi's ability to operate in this space, as they've been doing, especially considering SoFi's growth has been tied to the ability to refinance and manage federal student loans. On the flip side, the new administration's shift could also open doors for SoFi if they're able to adjust quickly and position themselves well within the new framework. What's even more interesting is that this shift could redefine the landscape of student loan servicing, so SoFi might face both challenges and opportunities as this plays out. In the meantime, the company has been busy expanding into other financial areas, such as investments and offering a credit card, ensuring that it's not overly reliant on one specific market. That said, for investors, it's important to keep an eye on this story. The student loan changes could shake up SoFi's business model, but they're also a company that's been diversifying rapidly. While it's hard to predict the full impact right now, SoFi's adaptability and its broad range of services might help it weather any storms that come its way. As the situation unfolds, it'll be crucial for investors to stay on top of how these developments influence the company's overall growth strategy and bottom line. Our review on MSFT. Microsoft Corporation has been making waves lately, but not all of them are smooth sailing. Known for its dominance in software and cloud computing, the company is also pushing hard in gaming and artificial intelligence, which is where the recent buzz is coming from. First, let's talk about a surprise that had the gaming world abuzz. Microsoft accidentally revealed that its next Xbox console might support Steam. Yes, the popular PC gaming marketplace. This could open up a new frontier for gamers, allowing access to a vast library of PC games on consoles. But the mention of Steam support was quickly removed from the Xbox user interface images, suggesting that Microsoft wasn't quite ready to confirm or deny it. It's still early days, so we don't know if this feature will make it to the next console, but it's something worth keeping an eye on. On the AI front, Microsoft has been doubling down on its investments. The company is developing its own artificial intelligence reasoning models, which could rival OpenAI, a major partner of Microsoft's. These new models are being tested in Microsoft's Copilot platform, which is already integrated into tools like Office 365. If Microsoft's models perform well, they could revolutionize not just Microsoft's offerings, but the entire AI space. This could also lead to Microsoft selling these models externally, expanding their AI reach even further. But it's still up in the air, and investors will be waiting to see how it pans out. Despite these exciting developments, Microsoft stock has had a tough time lately. The stock narrowly avoided its first 8-week losing streak since the global financial crisis in 2008, but it's still down 7% this year and 8% over the last 12 months. A lot of concern comes from Microsoft's massive $80 billion investment in AI this year, which has raised some eyebrows about whether that kind of spend will pay off. Additionally, the company's Azure cloud computing unit has shown signs of weakness, adding to investor concerns. It's a tricky time for Microsoft, balancing innovation with big investments, and it'll be interesting to see if these moves pay off in the long run. In any case, there's a lot happening at Microsoft, and whether it's gaming or AI, they're making moves that could reshape industries. For investors, it's about watching how these developments unfold and weighing whether the risks are worth the potential rewards. Our review on LYFT. LYFT Incorporated has always been a company at the crossroads of technology and transportation, offering ride-sharing, bikes, scooters, and even short-term vehicle rentals through its platform. But the latest news has investors buzzing. LYFT is gearing up to roll out autonomous vehicles, AVs, on its platform as soon as this summer. This is a huge move for the company, as it enters the next frontier of ride-sharing with AVs set to play an increasing role in the business. LYFT's EVP of Driver Experience, Jeremy Bird, made it clear that while this is still in the early stages, the company has already signed agreements with key partners like May Mobility, Mobileye, and Marubeni to get the ball rolling. For now, the AVs will be a novelty, likely too expensive for individual car buyers, and owned by large companies or fleet operators. But Bird reassured that in the long term, AVs will become more affordable and capable, eventually taking on a larger share of the rideshare market. From an investor's perspective, this announcement brings a mix of excitement and cautious optimism. The short-term impact on driver earnings is expected to be minimal as AVs are still in the exploratory phase. LYFT is focusing on building partnerships, testing the technology, and figuring out how to integrate AVs into the existing ride-sharing ecosystem. But as the technology matures, it could revolutionize the way LYFT operates, potentially lowering operational costs and changing the dynamics of the business altogether. That said, it's not all sunshine and rainbows just yet. LYFT still faces a lot of uncertainty with AVs. How fast will the technology evolve? Will consumers accept autonomous vehicles? How will it impact driver relationships? And how soon will AVs be financially viable? For now, investors will need to weigh these questions while keeping an eye on LYFT's progress in this new and exciting direction. As always, the road ahead is unpredictable, but this move certainly signals that LYFT is pushing hard to stay at the forefront of the rideshare revolution. Our review on EDR. Endeavor Group Holdings Incorporated is a global powerhouse in sports and entertainment, offering everything from talent representation through its WME agency to full-service marketing with 160/90. The company's reach spans across multiple segments, including owned sports properties, global events, and talent representation, with high-profile assets like the UFC, WWE, and EuroLeague under its belt. This diverse portfolio gives Endeavor a solid foothold across different sectors in the entertainment and sports worlds. Recently, Endeavor has made waves by capitalizing on its sports properties, with the UFC being a standout performer. UFC's continued growth, driven by record-breaking pay-per-view events and international expansion, has bolstered Endeavor's overall financial performance. Not to mention, the company's involvement in the representation of top-tier talent across various industries, from actors to athletes, keeps its revenue streams diverse and lucrative. For investors, the key takeaway here is the company's ability to leverage its multifaceted business model. By owning major sports properties, hosting global events, and representing A-list talent, Endeavor is positioned to weather fluctuations in individual sectors. Additionally, with major sports like the UFC continuing to grow in global appeal, the company is in a strong spot for long-term growth. However, challenges do remain. As with any business tied to the entertainment and sports industries, factors like economic downturns, shifting fan interest, or changes in consumer behavior could impact revenue. But for now, Endeavor's diversified approach and deep-rooted connections in the sports and entertainment space give it a solid foundation to continue pushing forward. Our review on SNAP. Snap Incorporated is making some noise in the market right now, with its flagship app, Snapchat, continuing to be a major player in the social media world. Snap is adding more ways for users to engage. From its new subscription service, Snapchat Plus, to its expansion into the web with Snapchat for Web, The company is clearly trying to diversify and tap into new revenue streams. And then there's the advertising side, with AR ads and Snap ads continuing to provide a platform for brands to connect with a younger, tech-savvy audience. On the stock front, things are heating up. Recently, there's been moderately bullish activity with Snap's options trading. The stock saw a nice bump, up by 2.6%, which is a solid move considering the market's volatility lately. With a heavy volume of options contracts, over 150K contracts traded and calls dominating the put activity by nearly 10:1. There's some optimism in the air. The increase in implied volatility also shows that traders are expecting bigger price swings, suggesting there could be more action ahead for Snap. This kind of bullish movement could signal that investors are feeling a bit more confident in Snap's prospects, especially with its focus on monetizing through ads and subscriptions. But, of course, there's always some uncertainty around how Snap will continue to grow its user base and keep up with competition from platforms like TikTok. However, the market's focus on Snap's options right now shows there's a bit of optimism surrounding the stock, even as it navigates these challenges. Our review on RIVN. Rivian Automotive is slowly but surely making waves in the electric vehicle market, and now it's starting to grab the attention of some major fleet customers. The latest development? Rivian is rolling out its first police vehicle, a patrol-ready R1S, with the Palo Alto Police Department set to debut it on the streets soon. This is a big move for the company, especially as it looks to expand beyond consumer vehicles into the commercial fleet market. This isn't just a standard police cruiser. The R1S packs some serious power. With a range of up to 410 miles, 850 horsepower, and the ability to go from 0 to 60 miles per hour in just 2.6 seconds, it's clear Rivian is positioning its EVs as serious contenders for fleet deals. And the R1S isn't just about performance. It's also got a spacious interior, addressing a common concern many police departments had about switching to EVs: the lack of room compared to traditional gas-powered vehicles like the Ford Explorer or Jeep Durango. The buzz around Rivian's new vehicle is promising. Mayor Ed Lowing of Palo Alto even praised Rivian's relentless technical innovation, drawing a parallel between the city's vision and the company's commitment to building the best EV for the future. These positive remarks could help Rivian secure more similar deals in the future, potentially opening the door to more municipal and fleet customers. For investors, this move into fleet vehicles could be a game changer. While Rivian has had its challenges in the consumer market, gaining traction in the commercial space, especially with big fleet customers like police departments, could help stabilize its growth and improve future earnings. This development also comes as Rivian continues to push its electric delivery vans, another area where fleet expansion is key. So, if the company can keep up the momentum in this space, it could give its stock a nice boost in the long run. Please subscribe, give the video a like, and watch more from our playlist. Thanks.